a Coinbase listing would not necessarily be good for the market. We can't not talk about the unconfirmed rumors that Coinbase is planning a stock market listing. These rumors are not new, but they have suddenly taken on a renewed relevance. Earlier this week, Reuters reported on the plans, citing sources familiar with the matter. And Coinbase has called an investor meeting, sparking speculation as to why. Should this happen, it would be a big deal for the cryptocurrency industry, but not necessarily the boost many seem to think. It would be a big deal for three main reasons. 1. It would focus a lot of mainstream attention on the industry as a whole, as financial reporters throw around the word crypto, as equity analysts scramble to produce reports, and as investors are taken aback by the sheer numbers at play in these relatively overlooked markets. 2. We the public would finally get detailed insight into the inner workings and accounts of one of the industry's most prominent businesses. As an analyst, I'm really looking forward to that. 3. It would provide a listed and liquid opportunity for investors to get exposure to the cryptocurrencies. This could put crypto, albeit indirectly, within reach of any investor, retail or institutional, and possibly give it a home in pension funds, exchange-traded funds, 401ks, etc. How would this boost the cryptocurrency markets? Increased mainstream attention could encourage more people to learn about cryptocurrency fundamentals, and possibly trigger a wave of new investment. Also, new funding from an initial public offering could mean further growth for Coinbase through a broader reach or a more extensive service. Now here is where the buts come in. Rather than an IPO, the move could merely represent a handsome exit for the initial investors through a direct listing. Even if so, however, it would set up a pipeline for further financing, which could influence growth further down the road. And, this is even more important, a public listing of a significant company such as Coinbase would not necessarily encourage mainstream crypto exposure. Investment would be going into a company, not the cryptocurrency market. True, the investment in that private company could encourage more investment in the cryptocurrency market further down the line, but the effect would not be linear. It could even be a self-defeating proposition. Investors en masse could choose to buy shares in Coinbase instead of buying cryptocurrency directly, which ironically could end up hurting Coinbase's prospects. Okay, that's an extreme extension of the theory, but it's not totally out of the question. The net effect of a Coinbase listing, or any other significant cryptocurrency business heading to the frothy stock markets, could be net positive for crypto assets. But it may not be the investment trigger many are hoping for. Anyone know what's going on yet? You're probably all aware of how previously underused and reconfigured words and phrases have been given a new life with the current crisis. Lockdown, social distancing, not to mention, unprecedented, and some new words are emerging. Here's one: coronacoaster. I kid you not. The market has been alternating between fits of euphoria and depression. With the highs higher than the lows, the net effect is up. The main new factor that impacted the market over the last week was the sharp rise and fall in the Chinese market. While not a large market by US standards, this rally underlines a significant difference in market influences. In the case of the US, part of the rally has been encouraged by likes of day trader, pushing the retail frenzy to new highs. Whilst, in China, the stock market moves were largely from the government telling retail investors to buy. And then, to not buy. The Bitcoin market, meanwhile, has been, well, uninteresting in terms of price and volumes. Maybe a strong breakout is building, maybe not, and either way, who knows in which direction. Meanwhile, the developments in the sector are galloping forward, as you will see below in chain links, so the lack of notable market trends does not mean that we get to put down our pencils for a bit and take a breather. Unfortunately, Kraken Futures, previously known as Crypto Facilities, has been granted a Multilateral Trading Facility (MTF) license from the UK's Financial Conduct Authority. Takeaway: this makes Crypto Facilities the first licensed crypto derivatives platform for the European market, and we could soon see the launch of euro-denominated crypto products. The London Stock Exchange Group has added 169 digital assets to its Settle Masterfile service, a global database that assigns unique identifiers to financial instruments. This helps LSEG customers keep track of traded assets from execution to settlement. Takeaway: this is not an official seal of approval, but it's worth asking why they would do this if it's not to include digital assets in their offering at some point in the future. The CFTC, which regulates the US Bitcoin and Ether derivatives markets, plans to develop a digital asset innovation blueprint by 2024. Takeaway: That may sound like a long time in the future, but in terms of new regulatory frameworks, it's actually not, and it does strongly suggest the Commodity Futures Trading Commission is already working on it. So, we can expect more investigation, communication and events from the world's principal derivatives regulator over the coming months, which should hint at the stance global derivatives regulators around the world could take. The Center Consortium, which issues the dollar-pegged USDC on top of the Ethereum blockchain, blacklisted a USDC address in response to a law enforcement request, freezing $100,000 worth of the stablecoin. Takeaway: that this is even possible. The freezing of a cryptocurrency account highlights the centralized nature of most fiat-backed stablecoins circulating today, and should reassure regulators that they are not necessarily going to lead to greater money laundering and financial crime. Center's cooperation with law enforcement, while anathema to original crypto-libertarians, could also position it as a complement to the eventual digital dollar, should that come about. There will always be demand for monetary transfer systems with no seizure risk, but institutional participants need to stick to the regulated space, in which the seizure option is likely to be a requirement. My colleague David Pan outlines the potential impact on crypto market infrastructure of Hong Kong's national security law. Takeaway: for instance, the Hong Kong Autonomy Act passed by the U.S. Senate this week in retaliation stipulates that the U.S. government should restrict foreign banks and subsidiaries of U.S. banks in Hong Kong from accessing the U.S. dollar system if they conduct significant transactions with China. That could increase market friction as it becomes harder for Hong Kong-based companies to access U.S. dollars. Hong Kong is a significant crypto market hub, so it remains to be seen if this will affect trading volumes. It's also worth keeping an eye on stablecoin flows, as they could be a short-term workaround. 10-day realized volatility is at a 2-year low, according to data from skew.com. The last time it was this low, it preceded a sharp price drop. This time, investors point to increased call buying as a sign the breakout might be on the upside. Takeaway: that feeling when an absence of activity is news.
Want to know more about finances? Expand your knowledge and keep updated to have a strong financial view. We from BrandFi, your branded finance, offer our loyal subscribers a free financial updates portal with first-hand information on crypto, Web3, NFTs, blockchain, finance news updates and more. Click the link below to proceed. You will get first-class information far earlier than the rest. But there is more you can and should do. Build multiple streams of income. More and more people realize and learn about their finances. They don't know how and where to start. We offer first-class financial information perfect for your needs. Strengthen your financials, get valid and legit information. Click the link below. Become part of our free offers, no financial obligations. But there is one important thing you have to know. You have to become active and involved. So, do it now. Become active and involved. I see you on the other side, BrandFi.